This interest payment now on the e-CNY, really, this is to promote the use of it, right? How do you see it?
Well, I think it's a recognition that what they've been trying up until this point hasn't really worked. And for the last few years, they've moved away from promotion of the private sector platforms that, as you mentioned, are used by pretty much everyone in China and are run by tech platforms that have been really good at getting people to adopt them, and tried instead to put this central bank digital currency at the center. And it really hasn't worked. Not many people have used it. And as you've noted, they actually have to kind of give it away for free to get people to use it. So that's quite a disappointment. Giving interest makes it a little bit more attractive, but also I think this is a recognition that this isn't actually a central bank digital currency anymore. Because if you are paying interest on it, also the banks then are using it, are now able to use it as reserves and lend against it. So it's not really a liability of the central bank. It's kind of like a traditional deposit with a couple of bells and whistles on it. So they're actually kind of pulling back, I would say, a little bit in the ambition of this project in terms of what is actually new here.
So the e-CNY is fully controlled by the PBOC, and that allows the government or the monetary authorities to fully monitor the money flow. In terms of the benefits of adoption, what are they, given that it also now can be monitored?
Well, it's not really clear what the benefits of adoption are. I mean, obviously, one of the things this does importantly for banks is, if you're a bank and you're talking about, do we want a deposit or do we want an e-CNY deposit? Now you're pretty neutral as a bank between those two. Previously, if you were a bank, you'd say, well, I'd much rather have that as a deposit than in the e-CNY because I can at least then lend against and do something useful with the money if it's not in e-CNY. So now kind of the distinction is blurred. They talk a lot about offline transactions. They talk a lot about smart contracts and things, but all those additional functions that the blockchain technology and everything they're talking about would actually enable them to do haven't really been realized until this point. So there's a lot of latent potential here, but like many other central bank digital currency projects, they're really struggling to find people who actually want to use them, struggling to find the killer app. Because there isn't really an advantage over the existing systems. And the thing they have to face is that the acceptance environment for this is really limited. So you can use Alipay and WeChat Pay or even your UnionPay card just about anywhere in China, but there are very few places that accept the e-CNY. And if there aren't many people using the e-CNY, there's not much incentive for the merchant to accept it. And so you have a bit of a chicken and egg problem here that all their efforts so far have not really managed to surmount.
So what is the key domestic use case? I was in China recently, and as everybody knows, that cash is not really used. It is Alipay, it is WeChat Pay, even to hail a car using the Didi app. In terms of adoption, in terms of domestic use, is it meant to replace cold hard cash?
Well, cash has actually become much less common, as I'm sure you saw in China. There's a funny anecdote a few years ago. Some people went to Hangzhou and tried to hold up a bunch of restaurants, and they ended up with, a very small amount of money at the end because nobody was using cash whatsoever. You get looked at very strangely, like you've time traveled from the Stone Age if you try to use cash somewhere in China. So I think originally the ambition was to somewhat create this kind of third option outside of Alipay and WeChat Pay, which are private companies. But then what they did instead is they built a lot of infrastructure and asserted a lot more control over those private sector offerings. So then the reason of being for another currency system wasn't really obvious. I think it's kind of being thought of as a backup. So if these big tech platforms go down, they want to make sure there's still some way to run payments in China. They talk about serving people who don't have bank accounts, who are currently still using paper money out in the countryside. But I really think they're going to continue to struggle to find people who actually want to use this system.
Would this be an antithesis to the decentralized cryptocurrencies like Bitcoin? We know that China does not allow Bitcoin trading or crypto trading, but there is, in Hong Kong at least, not on the mainland, this move towards the use of a stable coin. How do you view it in contrast to these types of digital currencies?
Well, it's a really interesting contrast of completely opposite approaches in the United States and in China. The Chinese approach looks a lot more like the European central bank's approach, actually, and also the Bank of England, which are looking much more seriously into central bank digital currencies, which are controlled by the state. And in the U.S., there's a lot more concern about you mentioned the visibility into transactions. There's a lot more concern about the effect on civil liberties that would happen if the U.S. government would be able to take a look at every single transaction that was occurring. And so the U.S. has actually banned movement on doing a central bank digital currency and has instead put all its weight behind stablecoins. And interestingly, the biggest debate on stablecoins today in the United States is should they be allowed to pay interest? And this is where China has said we're going to allow this new thing to pay interest. But the difference is that the paying interest is helping the banks in China in this case, but paying interest on stablecoins is a real threat to the banks in the United States, because it would potentially lead to siphoning off of money that's currently in deposits. People might instead hold that money in stable coins, and then those funds would instead be controlled by either the stablecoin issuer or the exchanges that they deposit them on. So it's a completely different approach. One in the U.S. is private sector led. The one in China is public sector led. The public sector led one has not really gotten the results that they're hoping for. But we'll have to see just how much the U.S. Approach actually leads to this explosion of stablecoins that a lot of people have been predicting, but maybe not necessarily will come to pass.